Hello, everyone. My name is Lauren, and I am the Client Relationship Coordinator with Oracle Applications and Technology Users Group. I am very excited to welcome you all to the Cloud EPM Week session titled ARCS in a Hurry, ROI ASAP. Before we get started, I would like to mention that in addition to the OATUG regular e-learnings, we do put on themed education weeks like this one throughout the year, so be sure to look out for those on our events page. Make sure to save the date for our Ascend conference next year. It will be at Caesars Palace in Las Vegas from June 17th through 20th, 2024. Just a quick reminder for today's webinar. You will be on mute throughout the session. However, you are welcome to send questions at any time through the Q&A in the Zoom platform. We will address questions at the end of the webinar. If you are interested in receiving CPE credit, your participation is required. Please make sure you are logged into the webinar for at least 50 minutes and ask a question in the chat area. Additional information about Cloud EPM Week can be found on our website's landing page. We are recording the session, and the recording as well as the slide deck will be available to Cloud EPM Week attendees and OATUG members in the knowledge base. You'll see the link for that in the chat area. And now I would like to turn it over to today's presenter, Kelly Green, Senior EPM Consultant from Datavail. Thank you so much for presenting, Kelly. You can take it away.
All right, thank you for that introduction.
You're welcome.
We will get started. All right. That is me. I'm an EPM consultant at Datavail, focusing on consolidation and account reconciliation. Over 15 years of experience, particularly with the Hyperion stack, and I've been using ARCS since before it was released, back when it was on-prem, along with HFM, FCC, and all the other fun acronyms. A little bit about Datavail real quick, all the specializations, all the Oracle products, all the industries. So today we're going to talk about implementing ARCS quickly, leveraging the ROI to do other things. So ARCS is a standalone product. It doesn't have to connect to anything else. And it's a good way to get into the cloud if you're not there. If you're already in the cloud, it is a very valuable addition to your system. Typical implementation path: configure, security, then you build profiles, which we'll talk about, do data integration, and then you validate. To get it in quickly, focus on the balance sheet. That's what you're already reconciling. That's what is required to be reconciled. Some people do income statement stuff. The system certainly handles it. Usually comes with a lot more complexity and decisions to be made. And so focusing on the balance sheet does not prevent you from doing the income statement. It just makes it a phase 2. Do not build for exception. Everybody's system is going to have something that doesn't go along with the theory. That's fine, but don't make everybody have that exception. We can deal with that separately. Some of the terms we're going to talk about today: a segment. It's an individual piece of metadata like a dimension. So mostly we're going to be talking about company and account. You might have cost center, profit center, business unit, department. Additional to that, profile is the metadata of a reconciliation. So it's your segments together plus a whole lot of attributes. A reconciliation is a profile applied to a period, and that's where it says available to hold data, available to hold a balance. That's where your financial data is going to be attached. A period is defined by start and end dates with a flag for monthly or quarterly or yearly or any other frequency that you may use. So a segment is the most important attribute, and it cannot be changed later. So once you load data to the system, even in testing, you cannot change segments. So this has to be where the most time is spent determining what you're going to use. and setting it up appropriately. It applies to all profiles. It determines the detail of each reconciliation because you can hold one balance per reconciliation, so one ledger balance. Start with company account. Again, don't add segments for exceptions. So my example I use is intercompany. You're going to have a few intercompany accounts that you want to reconcile. Account here is a text field. So you can have 1, 2, 3, 4, 5, 6 as your account, and then you could have a space, and then you could have 1, 2, 3, 4 as your intercompany partner, all still within the account segment. If you chose to do an intercompany segment, every single reconciliation that you have in your system will need to have a value in that segment. And because it's going to be working with Excel a bunch, leading zeros are not a good idea. So you're going to have something like no ICP or 9999, and it's going to look less than ideal for all of your non-intercompany reconciliations. So keep it simple, company account, start there. If you're doing department or business unit for a majority of your reconciliations, go ahead and add that as a segment. And don't do leading zeros anywhere. Account type. So the system has dashboards. They're going to help you out. Just having a system is going to collect everything online and centrally to provide better access and visibility to everyone. You're also going to get dashboards out of the box. 5 attributes are going to be on here. So this view by dropdown is going to have 5 attributes there. You cannot change which attributes are in that dropdown. You can determine how you use them. Account type allows you to build a hierarchy. So you can see we have assets and then our other items below that, liabilities and equity. It only displays at the base level though. So there's no assets display. That's really just for organization. You can use it for filtering and viewing reconciliations later, but in the dashboard, you can only see the base level. If you base this on the balance sheet, each one of these bar graphs would show you when management could begin reviewing that line of the financial statement. Currency, all currencies are set up by default. So over here, everything comes enabled. Uncheck your unused currencies because everything checked here in the box is going to appear in dropdowns when people go to enter reconciling items. So if you're just US dollar, uncheck everything but USD. If you've got pesos or Canadian dollars or euros or anything else, enable those. But there's 180 some currencies in the system, and it's going to make your dropdowns unwieldy. Organizational units. It's a hierarchy used to show the structure of your business. You can put your full org chart in here, and each organizational unit base level could be an individual company. It doesn't have to be. You could stop at any level in your hierarchy. In addition, so you can do, it controls the workdays and holidays, as you can see there. It says certain locales are going to have different workdays. You can have different holidays around the world. You can also, by using the access portion here, you can add view only and comment only security. So if you have somebody like a North America controller, you could add their access here and not on every single reconciliation. So that's much easier. You really only need to build this to the level that there are differences. So if you have a smaller back office structure, people who may see it, maybe you just need 1 or maybe 2. But if your workdays and your holidays are all the same and your security is all the same, you don't need to set up 80 org units here. The org ID is going to be something short, and then the name can be something longer if you want the legal name. You can also put the description, big long description in here if you wish. Holidays only matter when they're going to change when a rec is due. So if your reconciliation due date does not change because of Labor Day, then you don't put that in as a holiday. There's a lot of holidays that happen in the beginning of the month, or if it wrecks at the end of the month. All it is used for by the system is to say if the rec was due on day 5 with Labor Day, now it's due on day 6. Attributes. ARCS comes loaded with attributes. Everything you see is an attribute. So the account type is an attribute, natural balance, description, lots and lots of attributes. You can make as many more as you wish. This list here are the types that you can make: open text, date, time, integer, number, true, false, user, yes, no. So these additional ones you can use to collect data during a reconciliation. So you could have one that says it's going to impact the balance sheet or the income statement. You can use it to assign data to a profile. You could put department or country in, and you can use it to filter a display of reconciliation. So if you do line of business, for example, you could filter the reconciliations that you're looking at in a detailed display by line of business. If you just want to focus on one line of business at a time, you can do that. So any way that you want to, any data you want to collect, assign, or filter on would be a custom attribute. And these can be added at the initial build. They can be added later. Not everybody, if you make one, everybody doesn't have to assign a value to it. So you could make them for very specific reconciliations. So maybe you just want the bank name on bank account recs, you can put that in there. Process. This is another one of the 5 dashboard attributes. It's not utilized for any system function. So account type means something, org unit means something. This one's blank. Don't waste it. So it just comes with the value balance sheet. Not useful. You can duplicate your org unit if you want. You can do department. So any attribute that you're considering, if you don't have something in process, put that attribute in process so you can use it on the dashboard.
And Kelly, I'm going to jump in really quickly. This is Lauren. We have a comment in the chat box from W. Hugh. He said, we use Oracle Fusion Financials 23C. I would like to know more about setting up ARCS in the financial module. Thanks.
So ARCS is not a part of Oracle Fusion Financials. ARCS is a piece of the EPM suite. So that would include FCC for your consolidations, planning and budgeting, those types of applications. Account reconciliations is one of those. So you'd have to have, you can buy ARCS standalone. Otherwise, it is included with all of the flavors of the suite, the EPM suite. So a lot of times it comes with the financials contract. What helps with ROI is that most people already own it and don't implement it. And so it is a $0 change. And then you can implement the system. So anybody with the enterprise suite of EPM or any of the EPM suites already owns this product. You're already paying for it. So in your ROI calculation is no additional software cost. So the difference between doing reconciliations in EPM versus ERP financials, for anybody that has 2 ledgers, so if you're not just in Oracle ERP financials, you're not going to push another ledger into your ERP. So if you have multiple ledgers, if you're a large company, you could do it out. You definitely need to do it in EPM. I don't know what all Oracle Financials offers for account reconciliations. I know that there are certain specific subledger based reconciliations that they allow you to do, like cash management. But I don't know the extent of what you can do with the rest. All right. Other configuration you need to set up. These are pretty quick. Most of these are just a flag or a single box. So these are the system settings. You can just walk down them in the guide, but like yes, no, yes, no, yes, no, sort of things. Uh, Email notifications you definitely want to have on so that people know what they're getting. It is a lot of emails, but you have a lot of recs, and you can set the frequency and volume of your emails in the user settings. So each user can tone that down if they need to. Some other ARC specific items, your frequency. This is when you want to do reconciliation. So you can set them all to monthly, but if you have some you only do quarterly, you can change them to quarterly. And the frequency is by preparation and review. So if you want to prepare reconciliations monthly, but only review them quarterly, you can do that. And then if you want to just prepare them quarterly, the system uses this frequency flag to know that the last rec was not it's not the last month, it was last quarter. So it'll help you with some of the trend analysis that the system has. Risk rating, I always tell people to get from their audit policy. If you don't have risks assigned in your audit policy, just use one in ARCS. You can call it normal or something. But if you have high, medium, low, or you have different risk terminology in your audit policy, put it right here. Formats. A long time ago, when I was the only one putting in ARCS, there were no formats included. So Oracle saw what I did and said, hey, that's a good idea. We should include that for everybody. And so now you all get 28 formats that come with the system. So start with those. Formats allow you to change the terminology on screen. So instead of subsystem balance, you can have bank balance on your bank recs. It allows you to hide certain fields that may not be applicable to that. It assigns there's two methods you can use. So you can either do balance comparison or account analysis. It assigns the method to the format that's generally goes there. So bank recs are usually balance compare, prepaid expenses are usually account analysis. So it does that for you. You can add as many as necessary. You can tweak the ones that are in there, but it's going to give you a good head start if you start with those 28. Holiday rules, get from HR. Again, just move your due dates. So either use them or don't use them. Periods set up based on fiscal calendar and monthly close. Your reconciliation due dates are going to be built from however you define the end of your period. So your period is going to have a start and an end date, and then you're going to have a close date. So your start and your end date are going to be like August 1st and August 31st. And then your close date could be September 8th. And then you just pick either the end date of the period or the close date of the period to start your reconciliations from, and you can do plus or minus. So if you want to do end date of the period -1 is when recs can start, and you start some of your AP recs, then you can do that. If you want to start it at your close date and start it 5 days after close, you can do that too. Talked about system setting. Security. Like I said, most people, you already have EPM in most cases. If you don't, this is the easy one to start with, but you're going to add a user role. Everyone's a user except the admins. They're going to be admins. There's another role called power user, which is just for loading data. But in most cases, the admin is going to do the data loading, or it'll be automated. You're going to need to provision users for anybody that does prepare or review or view or comment. It ends up being most of the accounting team in most cases. One feature in ARCS that can help a lot is teams. So instead of a single person assigned to prepare or review a reconciliation, you create a team, and you assign that team to the profile. That allows anyone in the team to check out the reconciliation and work on it. And if they're unable to complete it, they can release it and someone else can check it out. Only one person can be working on it at a time. The system enforces strict segregation of duties. So even if you have the same people in prepare and reviewer teams, a person cannot do both prepare and review. But it allows you in larger team, like an AP team or a payroll team, the next available person can do the rec instead of trying to split all of their recs up and assign them to individual people. It also helps in areas that might have higher turnover because it is much easier to maintain the team than it is to reassign people for every reconciliation. Then you can also create a TBD prepare and TBD reviewer team so that when a new balance arrives, the admin can just put TBD prepare and reviewer teams on it to not slow down the rest of the process. You can assign people to the TBD prepare and reviewer team, so maybe like the accounting manager, or a couple accounting managers or senior accountants, so that they know that there's something new, and then they could assign it to a more a better prepare and reviewer.
And it looks like we have another question for you from A. Castillo. Is SSO available in ARCS?
Yes. So ARCS, again, is part of the EPM suite. The EPM suite is moving to OCI Gen 2. The EPM suite has always been available for SSO. Now everything's moving into Gen 2, still available to SSO. And if you don't have SSO, you can do multi-factor authentication within the Oracle Identity Cloud Management service.
Perfect. And one more from Zara. Is the end day and close day set up as one time? If yes, what about the holiday or weekend if it is the same day as close or end day?
So the end day, on my example, August 31st. That's a date that you're basing your reconciliations on. So you're going to have a number of days to prepare. So you have like 5 days to prepare and 2 days to review. And so then it's generating the due date based on a calculation from the end date plus the preparation time plus the review time. And then your organizational unit has set the work days. So if you don't include work days as weekends, it will not count weekends in those 5 days and 2 days. If you set up holidays, it will skip over the holiday and extend it. So if I set up Labor Day as a holiday, September 4th is not my second day. September 5th is my second day of reconciliations if I'm starting after August 31st. Okay, so we build a profile. This is the key building block. This is where all those attributes that we've made, that Oracle's made, all the ideas that they took from me come together and you get a profile. The mass maintenance of this can be done in Excel, ongoing. The admins will do almost all of it in Excel. Coming online is okay if you want to change 1 or 2 things, but you're going to end up with hundreds, if not thousands, of reconciliations. And so you could have 50 attributes very easily. And so the amount of changes and keeping track of it could get difficult doing it online. Also, if you do it in Excel, you can just copy it down wherever you need to. So I suggest create a single profile on the web, check all these boxes, fill all these things in, because the data in each field in Excel must be exact, and you have to know what the system is exporting. So enter source system balances manually, for example, is a checkbox. Well, that's a yes, no in Excel. This balance match percent tolerance has to look just like this here. There's other things. The user, you're going to fill in a name online, the email is going to kick out. So that's where it's helpful to know what it looks like on screen and then where you're going to fill it in so that you get the right value. So each profile can easily have 50 plus attributes. So if we go back here, every single field and box on here is a field in Excel when you kick it out, and you've got all these tabs. So that's why it's real easy to get to 50, because 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 on this screen, just here. Not all must be populated, and some are invalid for certain profiles. So if we go back here again, enter subsystem balances manually. So like if you're doing a bank rec, you check this box because you're going to load the ledger data, and then someone's just going to key the final balance from your bank statement. So that's enter subsystem balances manually. Prepaid expenses still has this box here, but it's invalid because it's an account analysis. There is no subsystem. So the correct value is not no, it's blank. Where populated must be exact. Most data is driven from a few key fields. We'll get to that in a minute. That one will really help you build the profiles and update and keep them updated. Some fields are the same for all profiles. So active, that's the same for everybody. Reconciliation, your age limits, that could be the same for everybody. So enter source system balances manually, no, because we're going to load it through data management. So that'd be a no for everyone.
And Kelly,
Input,
we have another
yes.
question here. Sorry to interrupt. From Billy Ho, can ARCS be used to perform reconciliations on EPBCS? Are there any companies using for EPBCS currently?
So a way to get further ROI out of the system is to use it more. And so ARCS doesn't care where your data comes from. Most of the time it comes from a ledger, whether it be connected to an Oracle Cloud GL or loaded from an SAP or EBS or things like that. Now for actual data, ARC should be getting data from the ledger, and then PBCS should just get the same data. So you shouldn't have to do that. Otherwise, if you had some for your non-actual data, if you had something to compare it to or a way you wanted to look at it to do a reconciliation, you could. I've not heard of anybody using it to reconcile PBCS. You could use it to just match PBCS to FCC or your ledger if you wanted, just real basic. Does A equal B all over? If that's what you mean, yes. You could use it for ePBCS. So further on the building of the profiles, you should be able to input just the profile and then have all of the attributes fill in based on rules and metrics. This is in Excel. We're going to get to why that's important in just a minute. You're going to build cross-reference tables that are driving this data from your key fields. So pull all of your balances from your ledger at the level of your rec. So if it's company account, pull all your balances. This is your base population. Account type, format, method, and normal balance should all be based on account. So if you have prepaid expenses, the account type is prepaid expenses. The format is prepaid expenses. The method is account analysis. The normal balance is debit. And that's for everybody, for everybody in prepaid expenses. So that is how you can fill those in very easily. Organizational unit and currency shouldn't be based on account, should be based on company. So your company is going to either be an organizational unit or roll up to an organizational unit, and you're going to know the currency. So that's based on that information. Profile name, you really need to pick this, but it's the alias of all segments. So it might be US Bank checking account 101, US Bank treasury account 101. You know, it could be something like that. Pick something that you can continue with. Build all the profiles based on logic and revise with exceptions. So you want to get to where you can just enter 101 11102, and all 50 fields after that are filled in based on rules in Excel, so that no one has to go through and fill them all in and ask someone else what those questions are. So here are some examples of tables in Excel that are going to help you with this. Let me see. So here's an account table. So you just take all your accounts out of your ledger, you put it here with the name. Then you fill in the account type, the format, the method, the balance, and the process. So here's process not being used. Balance is really easy. They're all debits or accounts that start with 1. You need this table because your reconciliation is not an account. It can be an account. You can just group all of the petty cash accounts for the whole company into one rec if you want, but generally you're doing company account or company account department. And so you have a table for all the accounts, you have a table for all the companies, because even as a system admin, you're not going to know when somebody uses a combination of your segments for the first time. You might know when a new account is requested. Almost everybody's going to know when a new company is requested. Same with any other segments you might do, but our balances are coming in as the intersection, and we're not going to know when that is. This table here, you can build from what comes right in ARCS. So here's the formats that come pre-built. Here's the methods they come with. Now, if you change a method or you add formats, you're going to need to add to that, but that's a quick one. So, this method is actually being driven off of this table. So you're combining a lot of stuff together. This is the one where I said that prepaid expenses can't have that a no in manual inter-system balances. So it's checking for balance comparison, and then it's setting an auto reconciliation to balance at 0, and to balance at 0 is no activity. This is the one for manually load subsystem data. If it's balance comparison method, then yes. So this is how you use formulas to drive all 50 attributes or more. Here's the account types we set up, and here's the format they should use. All right, so that gets us through sort of the build of account reconciliation. Now we're going to talk about the data.
Ellie,
Like
are you ready for one more question?
Yep.
Before you move on to data? This one is from Joyce. Have you implemented any ARCS instances connected to applications outside of the EPM suite? Do you recommend it? Asking as our company is looking to reconcile a data load from Oracle GL into EPM planning for completeness and accuracy.
I have implemented ARCS all over the place. So the GL is not part of the EPM suite. That's the ERP suite. But yes, you could use ARCS to reconcile the ERP to planning load. They would just all be balance comparison. You would have to come up with the cadence of how you're going to do it, because you're not doing a monthly reconciliation. You just want to see if all the data got into the system. It is not the best system to do that with. Planning has data management, which is purpose built to do just that and show you that all the data came through. It has check reports and all that, but if you wish to use ARCS, you certainly could. You could connect it to both the GL and planning, and it could pull data in whenever you want. And I would set them all to balance compare, make a format that's super basic because you're not doing a real rec again. All balance comparison. Does A equal B? Auto reconcile it all so that an admin can really be in charge of it. And even if there's 3,000 accounts being loaded, you're only going to you should have 0 exceptions, but maybe you have a handful of exceptions for something new. It's something that could quickly and easily be reviewed and taken care of. All right. We're going to go through this a little bit out of order, but when you get all your data set up and you go to load it, invalid mappings is going to be your most common error. This means that a balance is coming through that a profile does not exist to accept. And so this is a combination of all of your segments. You can see in this example that I have here, they have 1, 2, 3, 4, 5 segments of data, and they got 2 segments that are just 9s all the time because they're exceptions. So anytime a new combination of these 9 segments comes in that there's not a profile built for, you're going to get invalid mappings. This exports as a single column CSV file with this whole profile as the data. So when you build this, your input should be this, so that you know when you're building it, you could put company and account in, but take this, click this little Excel button, this comes out, then you slap this data into your Excel file with all those formulas, and it builds you all your new profiles, and then you can upload them into ARCS. This saves a ton of time and saves a ton of questions, because otherwise the admin's going to get this and say, what should I name this? Who's the preparer? Who's the reviewer? How many days do they get? What account type is it? They're going to have to ask all those questions. If that's all in a Excel file being driven off other data, they don't have to ask anything except what the name should be. And if you have a naming convention that is account name plus company name, they could fill that in too. Invalid mapping should not appear in your data load. So when you're doing, this is your data load screen in ARCS, you've got an error here. A properly built system will not have that, so that you know that when that comes up, it's really an issue. Some people I've seen leave that there because the whatever profiles appear there aren't material, don't matter, don't need to be reconciled. And that's fine, but that means a human has to know which ones count and which ones don't. It is much easier to adjust your mapping to ignore them, build the profiles in the system, or do something else to handle it so that you don't have an error every time you load. Import format. So ARCS has data management in it, just like FCC and planning and HFM and planning before it, except that ARCS is built differently. So you're still going to have an import format. You're still going to bring data in, but you only have 2 fields now, 3 fields. You have currency and profile, and then source type is just telling you what column it's going in. So that's not even anything you can do with it. So everything that we set up, every segment has to go together to be a profile. So you'll see down here for that prior example, company, and then all these 9s, and then account, and you got to put your own delimiters in. So company dash 569 dash account dash intercompany dash, and all those go together to be profile. So you got to build that properly. If currency is not in your data file, you've got to fill in currency here, or it will bomb out on the load. You have to have source type, source, or subsystem are your only values. Locations, you need a location per file or connection. So if you're connecting just to Fusion GL, you can have just one location. If you're loading from 50 different on-premise ledgers because everybody around the world has their own iteration of SAP, 50 locations. Similar names make it easier to administer. Helps with location, helps with folders and file names and all that stuff. So something similar would be helpful, especially if you're going to do automation. ARCS data loads are based on location, not load rules. So you can't just do one location called SAP and then a load rule for every data file you want, because you've got to, ARCS is going to run the location and all the load rules for it. Create your data load in ARCS. So after your data comes in and gets validated, data management isn't in charge anymore. ARCS, you initiate all your data loads from ARCS, and it calls that location, it runs that data load, and then ARCS pulls the data through database to database. It doesn't do an export. It doesn't do an import. It pulls it straight across. So you do not push data through with a third fish. So in ARCS, you have a data load, and it gives you all the locations that are available in data management. And you have to check each of those boxes, but you can do a group load. So if you did like my SAP example, you do all SAP as your data load, and it will run all 50 of those loads in a row so that you have less to do. Mapping. Mapping is going to could get a little dicey. If your system is built just like your ledger, it's easy. You concatenate them with the import format. You map it out. It maps to the same place. Very easy. Hopefully you don't have to change order or anything. So make sure you bring it in the same order that exists as the profile. You can pass it right through. If you have a global chart of accounts and you have many different ledgers that don't have that chart of accounts in them that you're mapping, that you would need to map, or maybe you're mapping already for FCC or planning, you're going to have to do that same thing here if that's how you want your reconciliations to look. But the whole profile is concatenated together, and you're going to have to do all the mapping simultaneously. So that can get complex in a hurry. Oh, you can also use mapping to put multiple companies or accounts, or group any segments you wish. So if you just had one AP account and you want to reconcile it for all companies simultaneously, you could map all of the companies with the AP account just to one profile. Or you could do all AP accounts up to one, but by company. So you can group them however you want through mapping. Data validation. It's easiest if you have SmartView. So you can use SmartView from the ERP, SmartView from FCC, SmartView from planning to allow you to see all that base data. Otherwise, you're going to have to get the base data somehow from the data file from somewhere. You can export formatted data from ARCS from the reconciliations tab, and then you have to line it up and sort it and make sure that all your data comes across and you have all of your data. Automation. You can use EPM Automate to do all the automation. It is different than FCC or PVCS because you have to pull. So you've got different commands. So the commands are import balances, not run data rule. But bring your files over, upload your files, run the data load. Or if it's connected, you don't have to do the upload. If it's connected to like the GL, you don't have to do that. You just run that data load and it pull the data through for you. There's a lot of other things that you can do. For ARCS, this is the one that is the most helpful. And you can use it against the ledger and the subledger and third-party data. Wherever you're getting your data sources for, you could continue running these jobs as often as you want. Every day, every couple hours, once a month, whatever your schedule needs to be. And use a separate install of EPM Automate so that your logins are not crossing over. ROI. Here's why we're here. Big red numbers at the top. 20 to 40% reduced employee time. The main ROI from ARCS is going to be employee time. It can save you money in other places. You could replace Blackline, you could replace Trintech if you have those. But most companies that are implementing ARCS are coming from Excel. And so if you're coming from Excel, you're talking about saving your employee time, and it adds up quick. You're going to eliminate the time to collect balance data. So right now, if you're in Excel, every accountant is downloading the information for each reconciliation themselves. You're going to reduce the time to create the rec file. You don't have to copy last month's Excel file. You don't have to do any formatting. If there's a new one, a new combination, you don't have to make a new Excel file, and you don't have to format the stuff. The reviewers and the approvers don't have to go find files and look for stuff and have everybody's look different. You're going to centralize the recs. You're going to include sign-offs, timestamps, attachments, and comments from everybody in the process in one place. So everybody knows where it is. Everybody can get it. Nobody has to go track this stuff down at audit time. Structured formatting is going to reduce the learning curve for new employees. It's going to make it easier to review and approve because the numbers are in the exact same place every time. You don't have to have my Excel file format and then my replacement's Excel file format and then that repeated 25 times around accounting. Export and share reconciliation information with internal external parties. There's a great feature in here called Report Binder, where you can select all or certain reconciliations and hit export, and it's a zip file. So you give your auditors your list of all the recs. They pick the 25 they want. You select those 25, you hit export, zip file with a web navigation screen that any 22-year-old auditor can use. All the timestamps, attachments, comments, reconciling items, action plans, everything in the system comes out into that zip file. They don't have to have access to the system. You don't have to worry about it being a different person that came last year. Email in the zip file. If you want everybody in the external reporting department to have access to all the recs, but you don't want to give them licenses, export the full data in that zip file, put it on SharePoint. You have dashboards for tracking progress. So we saw them a little bit early on, but you got dashboards by 5 different attributes. Managers can go in and see where are we, what's done, what's not done. They can click through any of those bars, words in the dashboards and see a list of recs that aren't done. Click on the rec. Is it with the preparer? Is it with the reviewer? Who is that? When was it supposed to be done? All of that right there for them so they don't have to go to someone else and say, why isn't your rec done? They can just go and see, okay, the rec is done. It's waiting on review. And I know that person's out sick. Team assignments and on-the-fly reassignments. So we talked about teams a bunch, on-the-fly reassignments. Somebody's sick, somebody's on vacation. You don't have to go in and readjust the profile. You can just assign that reconciliation for that current month to someone else. And then next month, it reverts back to what it was supposed to be. If you want that new change to take place, say somebody quit, or you got some new people, you can say, I want this to carry forward. And that can be done by managers and admins right on the fly. Automation for zero activity or similar recs. Break it all down to the base level, let the system auto reconcile. So that means automatically submit and approve the reconciliations with the proper flags and notation so that somebody knows the system did it, not a manager. But anything that doesn't have a balance or the balance changed or imbalance comparison where it matched, things that a human might be looking at now and saying, yep, that's fine, and then just continuing on. Now we have all of them for completeness. We have timestamps and checks so that we know how it happened. And you have a full audit trail. It pays for the implementation quickly. You start adding this stuff up, the dollars add up very fast, especially when you consider the volume of your reconciliations. Like I mentioned earlier, most customers already own the software. If you own the EPM suite, you own ARCS. We are just talking about compliance recs today. That's normal account rec. It also has transaction matching, which all of this that we talked about today sets you up to add transaction matching in a later phase. But this gets you a ton of time back. So an example, if you save 5 minutes from every rec, after 12 recs, you've saved an hour. We all know that it's tough to hire people now. Time is limited, especially during close. So that hour is precious. If you have 1,200 recs, which is the number that my current client has, 5 minutes saved is 100 hours a month. 100 hours. 30 minutes saved per rec is average. If I can save my client 32 minutes on 1,200 recs, that's a full FTE, an entire FTE. They don't have to worry. So that's one less job opening that they have to be worried about filling. When they do fill that job, that person can do something that's more valuable than downloading balance data 1,200 times. So it adds up very quick. So that's the basis. That's where most of the ROI is going to come from, is saving in time and people in your accounting department. But on top of that, you're going to have some peace of mind stuff, some knowledge, some institutional knowledge. Ask the controller how many reconciliations are performed. In most cases, in my experience, they don't know, which is not great. My controller should know how many recs I'm doing. How long does the rec process take in days? Is it 3 days? Is it 12 days? I had a company that did a 6-week reconciliation process every month. That's difficult to handle. How many people prepare and review the recs? And how long does it take to respond to audit requests? If your controller does not know all of these things off the top of their head, ARCS will help them. Everybody in the company will be able to see all of these things instantly with ARCS. So there's a save date for a send. That was supposed to say Q&A. I picked the wrong slide, obviously. But before we get here, I'm going to say one more thing, and then we can do some questions. The first person that signs a contract with my company, I will personally put in ARCS for a fixed fee of 8 weeks of consulting. So if you're on the fence, you're not sure it's going to work, 8 weeks of my time on 1,000 recs is going to pay for itself in 3 to 4 months. All right, let's hit up the chat and the Q&A. Who else has one? Okay, so
We haven't gotten to Kelly Burns yet.
okay, what is the best practice for how often to load data into ARCS during close? Okay, Kelly, great name. My best practice is every day, between 11 p.m. and 4 a.m., load it, depending on when your systems might do some posting, load it every day, and then you could do it on demand as you get down to like finals, depending on how your close and your account recs line up for timing. You might need to load it on demand a couple more times after that. There are companies out there that load every hour. That can work. The system will update any balances that change, so it doesn't matter how often you load it. The system will always make sure that somebody hasn't, even if somebody has approved an account and a last minute change come through, it will bring that back down to the preparer. There is overkill though. There are certain companies who had IT standards that they apply to everything that don't apply to ARCS. And so one company in particular closes their AP on the last day of the month, and then their IT standard said that all data needs to be loaded every hour. So they load that unchanging AP data every hour for 5 days. It loads over 500 times, and it slows their system down. So I would say start with once a day, see how that works. Joyce, are monthly cloud updates normally extensive for ARCS? No, they're very small. There's usually some tweaks for transaction matching. That's about it. There are a few changes here and there, but it is not intrusive. Can you do on-the-fly assignment for a certain time period? For example, you know an employee will be on leave for 3 months. Yes, you can. You can determine if you want that to be, you can do exactly what you're saying. You can do a 3-month assignment for reconciliation, and then it will come back to the original owner. Anyone else have any other questions that they would like answered today? If there's something very specific that you want to see, I didn't do a demo, and Oracle has an EPM channel where they do video overviews of many of these things. So if you want to see something in action, you could start there. Otherwise, you contact us and we can do demos also. Notifications for approvals. So I sort of glossed over email notifications. You're going to get email notifications for everything. You're going to get an email notification when it is time to start your rec. You're going to get an email notification when your rec changes status, like goes from open to submitted. You're going to get an email when your rec, a day before your rec is due, unless you've done it. And then you're going to get an email when your rec has been approved. So there's a lot of them there that you can get. In the user preferences, each user can change. They can adjust the volume that they get. Some of those they can choose not to get, and they can change the frequency. So they could get them, they could get all their emails once a day, or they could get emails as soon as it happens. It depends on how many each person has. You know, if each person has 10 recs, it's not really a big deal. I've been in some places where some people have 300 or 400 recs, and then the email volume is a little bit cumbersome. You guys could do a survey for this, which I don't have on here. If you go to datavail.com/EPM-webinar-survey, you can complete a survey on this, and all entries will be eligible to win a remote control car. Fun for kids and adults alike.
Awesome.
Oh, there's some more.
Another one. Jody?
What was the process you recommend to recon between GL and EPM? So again, you would pull the balances from both systems. You would have a single format. There's just balance comparison, and the system would auto reconcile anywhere that the difference is 0 or a threshold that you have set, either in absolute value or in percentage, so that only the things that aren't auto reconciled would be left, and you would know that everything else matches. You'd want to be careful about where you're pulling from EPM. So in my FCC world, you would only want to pull from managed data, because that's all that's going to match the GL. You wouldn't be able to match things that were journal entries or data input in FCC. EDM cannot be used as metadata stores at this time. This is not a hierarchy. The attributes are not there. So EDM is not a source at this time. With respect to emails and workflows, can you configure notifications to follow up on outstanding reconciliation items that are outstanding a certain length of time? No, you cannot. What you can have is you can set the date on your reconciling items. Each month you're going to close your rec and you're going to go on to the next month. If you carry forward that reconciling item, you need to make sure that the date remains the same. So you could say that it's going from 20 days to 50 days because you carry it forward another month. You can set the limits so that reconciling items are not valid after a certain period of time, so that the preparer would no longer be able to put that in if it reached that threshold. You can also review all of your they call them transactions, reconciling items. You can review all of them by how long they've been outstanding, so that you can see things that have been outstanding for your given threshold. Any others? Looks like we're out of time. So go to info@datavail.com if you would like to have more questions answered, talk about ARCS some more, or get a rad deal on the implementation of ARCS.
Perfect.
And then have a good day.
Thank you so much. I want to say a huge thank you again to Kelly for presenting during our Cloud EPM week with OATUG. This will conclude today's session, and thank you to everyone for joining us today. I hope you all enjoy the rest of your week. See you next time. Bye.